What if I told you I created another dividend portfolio that has a market crushing yield and pays you every week of the year? Would you care to know the stocks that made the list? Then make sure you check out today's video. Really quick, before we get started, if you guys wouldn't mind tapping the like button on the video, it helps me and the channel out a lot, and I would really appreciate the support. In my last video, that will be linked at the end of this video, I created a portfolio that beat the market over the last 10 years and paid you dividends every week of the year, but that portfolio was focused mainly on dividend growth. In realizing that not everybody cares about dividend growth rates like I do, I wanted to take another crack at the getting paid weekly portfolio and this time focus it on dividend yield for that sweet passive income. Once again, I will be using the champions, challengers, and contenders list for all of this research. Now let's get to the content. Just like the last portfolio, I also have criteria for this portfolio to meet, and that criteria is as follows. I tried to create a high yield portfolio that beat the S&P 500, and I wasn't able to do so since most of the time when you have higher yielding stocks, you have to sacrifice growth. But we were able to achieve at least a 3% forward dividend yield, under a 70% current payout ratio, and again, no more than one stock per sector per month, and no more than 3 stocks in any one sector for the whole portfolio. Once again, since this is designed to be held in a taxable account, I did not pick any REITs, and all of the stocks had to be paying consistently in the time ranges that I selected every month that they pay. So the first group of stocks will all pay in January, April, July, and October. And the stock that pays in the first week is going to be United Bankshares, stock ticker UBSI. They are in the financial sector with a current payout ratio of 53.27%, a 1.47% 5-year dividend growth rate, and a 4.24% forward dividend yield. They pay out $1.44 per share per year, which is equal to 36 cents per share per quarter. Their next estimated ex-dividend date is June 17th of 2022, with an estimated payout date of July 1st of 2022. They are due to raise their dividend for the 48th year in a row, January of 2023. The second week payer is going to be Best Buy, stock ticker BBY. They are in the consumer discretionary sector with a 29.74% payout ratio. They have a very impressive 20.36% 5-year dividend growth rate and a forward dividend yield of 3.86%. They pay out $3.52 per share per year, which equals 88 cents per share per quarter. Their next estimated ex-dividend date is June 30th of 2022, with an estimated payout date of July 14th of 2022. And they will raise their dividend for the 21st year in a row on April of 2023. The third week payer between the 15th and the 21st is going to be Cardinal Health, stock ticker CAH. They are in the healthcare sector with a 40.29% payout ratio, a 1.8% 5-year dividend growth rate, and a 3.19% forward dividend yield. They pay out $1.96 per share per year, which is equal to 49 cents per share per quarter. Their next estimated ex-dividend date is July 1st of 2022. They are actually projected to do their 36th dividend increase in a row, July of this year. And the fourth week payer is going to be Altria, stock ticker MO. They are in the consumer staples sector with a 69.99% payout ratio, a 5-year dividend growth rate of 8.25%, and a forward dividend yield of 6.48%. They pay out $3.60 per share per year, which is equal to 90 cents per share per quarter. Their next estimated ex-dividend date is 7/15 of 2022, with an estimated payout date of 7/29/2022. They are on track to raise their dividend for the 14th year in a row in October of 2022. The next group we're going to be looking at are the payers for February, May, August, and November. The first week payer is going to be Verizon Communications, stock ticker VZ. They are in the communications services sector with a 46.83% payout ratio. They have a 5-year dividend growth rate of 2.09% and a forward dividend yield of 4.93%. They have an annual dividend payout of $2.56 per share per year, which equals 64 cents per share per quarter. Their next estimated ex-dividend date is 7/19 of 2022, with an estimated payout date of 8/2/2022. They are due to raise their dividend for the 19th year in a row, November of 2022. The second week payer is Cheniere Energy, stock ticker CQP. They are in the energy sector with a 69.29% payout ratio, a 5-year dividend growth rate of 9.73%, and a forward dividend yield of 5.22%. They have an annual dividend payout of $2.80 per share per year, which equals 70 cents per share per quarter. Their next ex-dividend date is 4/29 of 2022. That is not estimated. That is a confirmed ex-dividend date with a confirmed payment date of 5/14 of 2022. They are due to raise their dividend for the 7th year in a row, February of 2023. The third week payer is going to be AbbVie, stock ticker ABBV. They are in the healthcare sector with a payout ratio of 41.81%, a 5-year dividend growth rate of 17.5%, and a forward dividend yield of 3.64%. AbbVie has an annual dividend payout of $5.64 per share per year, which equals $1.41 per share per quarter. Their next estimated ex-dividend date is 8/2 of 2022, with an estimated payout date of 8/16/2022. They are due to raise their dividend for the 10th year in a row, February of 2023. And the fourth and final payer for this time period is going to be MDC Holdings, stock ticker MDC. They are in the consumer discretionary sector with a 23.02% payout ratio and a 14.22% 5-year dividend growth rate. This is a 5.51% forward dividend yield. They pay out $2 per share per year, which equals 50 cents per share per quarter. And they have an estimated ex-dividend date of 5/9/2022 with an estimated payout date of 5/23/2022. And they are due to raise their dividend for the 6th year in a row, November of 2023. And getting into the last group of payments, you have March, June, September, and December. Our first payer for this group is going to be Pfizer, stock ticker PFE. Pfizer is in the healthcare sector with a 35.29% payout ratio, a 5-year dividend growth rate of 6.32%, and a forward dividend yield of 3.32%. Pfizer has an annual dividend payout of $1.60 per share per year, which equals 40 cents per share per quarter. Their next ex-dividend date is 5/20 of 2022, so you still have time to buy. And their next payout date is 6/4 of 2022. Pfizer is due to raise their dividend for the 13th year in a row, March of 2023. The second week payer is going to be IBM, stock ticker IBM. IBM is in the technology sector with a current payout ratio of 68.44%. They have a 5-year dividend growth rate of 3.7% and a forward dividend yield of 4.75%. IBM has an annual dividend payout of $6.56 per share per year, which equals $1.64 per share per quarter, with an ex-dividend date of 5/27/2022, so still time to buy. IBM is due to raise their dividend for the 28th year in a row in June of 2022. So actually this next payment is when IBM is due to raise their dividend. All right, and the third week payer is going to be Manulife Financial. I hope I said that right. Stock ticker MFC. The sector is financial services with a 33.98% payout ratio, a 5-year dividend growth rate of 10.9%, and a forward dividend yield of 5.07%. They have an annual dividend payout of $1.04 per share per year, which equals 26 cents per share per quarter. Their next estimated ex-dividend date is 6/7 of 2022, and their estimated payout date is 6/21 of 2022. They are due to raise their dividend for the 9th year in a row, March of 2023. All right, and the fourth and final payer for this period, as well as this portfolio, is going to be Dividend Energy, stock ticker DVN. They are in the energy sector with a 55.97% payout ratio, a very impressive 40.84% 5-year dividend growth rate, and a forward dividend yield of 6.89%. Devon pays out $5.48 per share per year, which equals $1.37 per share per quarter. Their next estimated ex-dividend date is 6/16 of 2022, with an estimated payout date of 6/30/2022. Devon is not due to raise their dividend for the 6th year in a row until June of 2023 because they just raised their dividend to those prices that I just mentioned. All right, and again, I wanted to give you guys an overall recap of what we just talked about, along with some details to cover the whole portfolio. The average payout ratio for this portfolio comes in at 47.32%, and the 5-year dividend growth rate of this portfolio is still a very impressive 11.43%, which is higher than the 6.08% from the S&P 500. With this being the dividend yield focused getting paid weekly portfolio, we came in with a dividend yield of 4.76%, which crushes the S&P's 1.34%. Again, you guys will see right here that the goal of the portfolio is to have each of these positions evenly balanced at 8.333%. And as you guys will see right here, I kept my word, and there are no more than 3 stocks in any one sector throughout the whole portfolio. Once again, I have some screenshots that I wanted to share from portfoliovisualizer.com, where we will go over what this portfolio has done in the past and what kind of income we can expect to bring in. This screenshot shows the same $1,200 initial investment back in 2012 until now versus the S&P 500 and what it would turn into, the compound annual growth rate for each portfolio, and the best and worst years percentage-wise, as well as the highest fall, which is known as the max drawdown. You can see that this portfolio focuses more on dividend yield, so we sacrificed beating the overall market in the last 10 years. This screenshot will show the annual returns of each portfolio. The getting paid weekly portfolio is in blue and VOO is in red. What this chart does a good job of showing is the big swings that this portfolio has the potential of having. In 2013, both this portfolio and the S&P had great years. The weekly portfolio just brought back nearly 50% return, which is unbelievable. On the flip side, there are several years the S&P beat this portfolio, and there are even years where they both lost money, but the S&P proved to be the better store of value in those years as it did not lose as much value as the getting paid weekly portfolio. The last screenshot I wanted to leave you guys with is, of course, what we're all here for, the dividends. You can see that the getting paid weekly portfolio offers not only consecutively paying dividends and consecutively growing dividends, but also a market-crushing yield of that 4.76%. With only your initial $1,200 investment, also known as $100 in each of these stocks, you would have made $49 in 2013, $78 in 2017, $161 in 2021, and $48 through March of 2022. The obvious goal for any portfolio should be to keep adding money. So if you're able to add $120 every week, bi-weekly, monthly to this portfolio, like $10 in each stock, the numbers that I showed in this video will be even better. Well, that's going to wrap it up for today's video. Please be sure to leave a like if you guys enjoyed the content and or learned something here today. Please be sure to subscribe to the channel if you guys are new here. I post new dividend related videos every Monday and Friday. And if you guys do subscribe, comment down below letting me know you subscribed. I'll personally thank you in the comments, and you'll be in this section in the next video. Also, comment down below and let me know what other kinds of getting paid weekly portfolios you guys might be interested in seeing. I have a ginormous spreadsheet with a lot of information, so I can just change some filters around and give you guys a nice portfolio to help you guys get paid every week of the year. But until next time, see ya.